Good afternoon, everybody, and welcome to Ask the Experts. My name is Capolingua. I'm the market analyst over here at Think Markets Australia, and it is a pleasure to be with you as we pick through the pieces of your portfolio. It has been a tough week on markets, especially for some of the stocks we like to look at. Hopefully, we'll find some gems. A very quick comment on the Nasdaq, just that obviously short-term trend is in place. Long-term trend is now established, I believe, to the downside. It's very, very tricky here. You know, we're getting candles almost alternating on a daily basis between bullish and bearish candles, which are bullish enough for me to say, well, that may well be the low, and then candles which are bearish enough for me to say, well, we're probably going to see more of a decline. And as a trend follower, it is exactly these periods where picking direction becomes absolutely the hardest. So, you know, as a trend follower, you kind of work on a more often than not rule, 60-40 would be great. But when in strong established trends, and by that I mean, somewhere through here, I do believe your strike rate tends to be much higher even than that in terms of predicting based upon the price action where prices are going to go. Unfortunately, when you get into a lack of trend or this sort of volatile price action, you'd be very lucky to go 50-50. So it's in those periods, the smartest thing to do is just really pull back on your exposure. Hey, if you've got a low predictive ability, why are you still in the markets trying to predict? So let's preface much of today's commentary with that. I don't have a crystal ball. I'm basically doing the best with the tools that I have. Hopefully it's sufficient for you. Anyway, we're talking about VR8 as the first one. This one's come in from Rob. Wonderful trends, and as I said, when trends are strong, I think you have a high probability of making those predictions based upon the price action. What's a price action? Price action made up really of a couple of main items. A sort of bigger picture, we have the overall trends, and to summarize those, I like to use my moving averages, and a couple of bands of moving averages working here. And if I hover over that, you can see the ones I like to use. 34 and 21 are the two shorter term moving averages, and then 144 and 233 are the longer term moving averages. Why those ones? Look, they do a really good job, in my opinion, and I'm talking about over a decade of experience in using these in terms of summarizing the short-term and the long-term trend. Then I'm looking for alignment between those trends to make decisions. Obviously, up is fantastic, down is fantastic if you're looking for shorts. We can see here green on the screen, traffic light system, so green is go. We do sometimes get this sort of indeterminate trend. You can see for a short period there on the long-term trend where it will go orange and one sort of back here, and then in downtrends we'll no doubt see those later in today's presentation. They'll go various shades of pink. The second thing in terms of understanding price action are peaks and troughs I like to use, and I'm going to skip that one because that one doesn't count. And again, you might be saying, well, how do you know where they are? That's probably a discussion for another time. But very simply, we're talking about the pointy bits on the chart. And I have drawn them in black. Next time I'll draw them in red so you'll be able to see them a bit better. And I'll make them a bit bolder. But we're looking for the pointy bits on the charts that are either pointing up for your peaks or pointing down for your troughs. And the final piece of the puzzle in terms of price action for me are these Japanese candlesticks. And very simply here, white candles, lower shadows equals excess demand in the system. Fantastic if we're looking to go long. And black candles and upper shadows indicates excess supply in the system, which is not great if we're going to go long, but definitely better if we're looking to go short. Just going to clean that up a little bit and give you some analysis on VR8 now, obviously with the background of some of those technicals I look for. And then obviously I'm looking for volume as well, but we'll get into that as the presentation progresses. In terms of price action, some of the things I like to see in terms of peaks and troughs, and I won't draw them all in, but just the important ones here. So we've got a peak there, and then we pop up to a peak here, and we're coming back, and hopefully, we don't know yet, because we will need a candle which has a higher high and a higher low to tomorrow, and that would define a change in the short-term trend, which then will set this as a trough. So let's just assume for now we get it. Okay, and I know it's a big assumption, but let's just assume tomorrow high, low, and we get it. What we like to see is that previous areas where there was supply. And how do you know there was supply at that point, this peak? Well, price went down, so excess supply causes the price to go down. We like to see those act as future points of demand. Okay, and a lot of that's to do with ex post regret. So we say that people who were supplying at this level, around 12 cents, when the stock got to 18 cents, they're regretting that decision. They're thinking, I should not have got out. And ideally, I should be back in. But even more ideally, I get back in roughly where I got out. So I don't feel so silly. And that can potentially create latent demand at a particular price point. And when I say latent, I mean in the system, weighting the system. So If the price turns out to bounce off that level, we can then say it's a point of demand. And only after it's occurred can we say it's a point of demand. We don't know until we get the price action signals to tell us that. But if we get that demand there, it is positive. You'd rather have it than not have it. So today's bounce is encouraging. It's happening in a zone which is also where we would like to see bounces and expect to see bounces occur from in this light green zone, this short-term dynamic support zone. So whilst previous points of supply and demand, peaks and troughs, offer what we call static support and resistance, these moving averages give us our dynamic support and resistance. What does that mean, dynamic support? Well, there's a perfect example right there where price tends to bounce off that level. Here's a couple of little examples here where the price bounced off the short-term level. So all looking pretty good for now on VR8. I know this is probably going to frost you a little bit, but I'm just going to get rid of those just so I can get back to what we're seeing here underlying. These supply candles are a bit concerning, but they're not out of step with what's happened in the rest of the market. Let's face it, it's been a pretty tough time out there. So therefore, there's no surprise that VR8 has struggled. So if I see something struggling when the rest of the market is going gangbusters, that worries me. I think that's less of a concern here. I think if you've got it, I think there's certainly enough reason to hold it. I wouldn't say you're in the clear because, yeah, this indicates a decent amount of supply. And unfortunately, what this creates when you have this sharp downtrend like this, short-term downtrend, is unfortunately quite a bit of supply on the way back up that you need to clear if you want the price to go up and obviously put you back into profit or give you more profit. So that would be the only thing I think hanging over it. If I have to give it a score out of 10, maybe that helps with your reference on this one. Look, I think it's a really solid sort of 6.5 out of 10. Okay, and then I'll let you decide whether it's something you'd like to engage with if you're not in the stock already. But if you're in it, I think it's a solid hold. I can't see anything in the volume too sinister there. On the way back up, what you want to look for, obviously white candles, lower shadows out of this zone, and a little bit of volume as we pick up from say 13 to 14, because it'll indicate we're getting rid of some of that supply. So we say that, unfortunately we have created this pool of supply, and the only way to get through that supply and then go to 17, 18, 19, 20 is to trade with it. We've got a bunch of people, unfortunately, who got in here, and unfortunately, right now, if they're in at 17, 18, and did people get in there? Of course, it was a widely hyped stock. They're just feeling a bit sad at the moment, and they would love to be out near their break-even point, which just happens to be obviously around that level, doesn't it? I think that's pretty interesting. So hang on to that one. In my opinion, Rob, obviously, as we said, general advice. It's up to you what you end up doing with it. Okay, this one is coming from Doug now. He's got CTM, which is Centaurus Metals, and this is or was a wonderful looking chart. Unfortunately, a chart which I might call wonderful last week, it might not look as wonderful the next week. Uptrends, they do bend and they do end. And hopefully in these sessions, I give you enough education, enough information to take with you between Tuesdays to then apply some of these exit strategies that we have, just in case things don't go as planned. And as we said before, predictive ability of a trend follower is somewhat diminished when there is no trend, so keep that in mind. I'm a little bit concerned about this one, Doug. I hope you spotted it. I was about to say, I'm sure you spotted it. Never nice to see that sort of a candle, big upper shadow, black body, and then when you sort of see it in and around where you've seen another one, just does speak to sort of supply in the market. And then unfortunately we see this lower peak here. So now we kind of start to say, well, there's always supply in the market, isn't it? Every day there's supply in the market. It isn't necessarily a bad thing. People want to get out, they want to take profit, they want to realise capital for whatever. But what we're more concerned about is this idea of whether supply is diminishing or supply is building. And that is potentially what we're seeing here with this lower peak being set. So we're moving into this sort of medium-term downtrend now. Not only do we move into the medium-term downtrend, I think it's important to note that we failed at what should have been a support level. We failed with some pretty nasty candles, and then not only did we sort of create that lower peak, we're actually sort of creating a lower trough with today. I wouldn't say today's necessarily an update. The index is roughly flat, but a lot of the risk-on stocks that were belted are doing better today, and this one isn't. So that's a little bit of a concern there. And we're pushing not only into this medium-term downtrend, below some key levels in the recent past, but I think this is also concerning as well. So we should have demand coming in from some of these areas as well, and we're not seeing that either. So potentially there should have been, well, you can actually see it was there, to be fair. So this old point of supply did, at least for a short period of time, act as a point of demand. But the failure there, I think, is potentially even more damning for this one. Where is the support going to be? Well, there's another demand point down here. It coincides with the long-term uptrend zone as well, and that would probably be a likely point where we might see some building. If it was me, I think there's, well, I don't think, I know there was enough in there to do some, what we call in these sessions, managing our exits. And it means a partial exit, so minus sort of 1/3 for each signal you might see, and then maybe there's been a few signals there. If you haven't already, I think balance of probability, and just in terms of reward to risk, I think managing your exit is probably a sensible thing to do. However, keeping some skin in the game for a potential bounce and recovery here might also be a way to trade it. Again, probably worth doing this for each stock we talk about today. If I had to give this a score out of 10, look, whilst the short-term trend is really struggling, the long-term trend, if I zoom out, is fantastic. So there is an ebb and flow going on here. So I'm going to say it's probably more of a 5 out of 10 at the moment, depending on whether you're sort of a shorter-term trader or a longer-term investor, is how you probably tackle this one. For me, if I had my money in there, I'd probably be looking to take a little bit out, and if I wasn't in it, I wouldn't be looking to get into it on the basis of everything we've discussed. The next one is PAM. This one is also for Doug, and this one is looking a little bit flatter, so I can probably do this one fairly quickly. And it has shown some signs of life in the past, hasn't it, where it was sort of looking to get going. I would say certainly here, and if I tweeted about it here, that is a real possibility, because it looked really, really good there. And then we've gone from this demand side market into an equilibrium market, and that's where we are now. I think there's enough in there to hang on to at least a part position. Unfortunately, I don't think there's enough evidence to really get excited about it if you don't have any money in it. And if I had to rate it, I'm probably gravitating more towards that 5 out of 10, just on the basis that the long-term trend is still intact, but the short-term trend is rather uninspiring. But not as bad as some of the other ones we've seen also. And there are a couple of redeeming features in here. And that candle's not too bad, that candle's not too bad. And in a tough market, it's hanging in there pretty well. So best I can probably go on that one is a hold. ADT, again, another one which started to look good. It was in that sort of gold precious metals cohort that sort of through here as the gold price started to improve and the sector came into focus, was starting to look okay. I might just zoom out a little bit, because I fear that I have zoomed in for something and then not zoomed back out again. And I just get a bit of a bigger picture of the trend. I'm a little bit concerned about this one. I think it's a false start, unfortunately, and many of the concerns I had about the first one, which was vitamin CTM, this lower peaks and troughs pattern here. So you can see us coming in here now and breaking through key support levels, which you would really hope that it would hold, and it kind of isn't. And where could it go? Down to here. Yeah, I think if you're in, and unfortunately, because it's a bit of a false start, the ramifications are 210 potentially. What could change that? What could make things better for this if you wanted to persist with it? We need to see some white candles coming in pretty quickly, and they need to come in terms of time very soon, but also in terms of price right here. We need today's candle to turn around. I'm going to get an update in 3 minutes on this one, because I do get updates on the hour, but 20 minutes after the hour. So we'll see if that maybe is developing a bit of a lower shadow. If it can put in a nice lower shadow here and maybe some white candles, then my fears may be averted. But we're just going to have to wait and see how the price action plays out. And that's the wonderful thing, of course, with price action, is you get a new candle each day, and you get to infer from that candle what the balance or imbalance is between demand and supply. Sorry, Doug, a couple there which don't look so good. MQG, which does look good. This one is for John, and we can see straight away some green on the screen. That's always great. And the function of those moving averages, obviously we talked about identifying those trends, but when I'm scanning, and this is going to be a real useful practical tool for you, because no doubt you'll have your own charting package and you'll have a list of stocks that you'll want to tab down to scan. And I'm just going to start at MQG and go down. I'm going to get a random bunch of stocks here because it's alphabetical and I've got every stock on the index here. But just as I scan down, those colors just give me a very quick visual tool on stocks that I need to then pay greater attention to. Okay, so I'm going down, but I'm going to go back up again now. So MMA Offshore is one you'd probably go have a closer look at. It's one that's done really well, hasn't it, recently? And I'm just going to go back up the list now, back to Macquarie. So, short list, I'd write that down and I'd quickly go to the next chart. I probably wouldn't write that one down. It looks a bit obscure to me, and it's a fairly recent float, so we don't have a lot of data on it. Then I go to this. I don't think I'm going to write that down. Whilst there is a reasonable trend there, you can see the candles are far from clean. We're looking for white candles over black candles. We're not really seeing that. And the price action is very overlapping. Certainly for a long, I would skip over this one very quickly. So we'd get barely a second, as would that one as well. This one, it might get shortlisted. There's a bit of green on the screen, but probably on the price action and the candles, again, I'm going to leave it go because I want to get to the really good ones. And here we are back at Macquarie. Now, I'm not saying this is the best one out there, but it does look very, very solid. And certainly you can see it's one that, on that basis of scanning very quickly, you would pay closer attention to. What do I like about this? I like this. I like the short-term uptrend. I like the long-term uptrend. I like the fact, zooming in, that we are seeing a bunch of white candles and lower shadows as well coming in around this dynamic support zone. That's encouraging. What would make it better? Because it's far from excellent. It's okay. I'd prefer to see higher peaks and higher troughs. I'd prefer to see areas of likely demand holding. We are just holding there, to be fair, but we're not exactly seeing this sort of clean price action, are we, heading up? So without that, I think it's very solid. I think there are some very encouraging signs in there, but I would probably not be a buyer just yet. I'm certainly a holder. I don't think there's any question about holding. I think that's a lock for me. Just zoom out to normal, and I'm going to get rid of those. And I would say, where does it become a buy? Well, there's actually some really nice candles here. So if you're a more aggressive trader looking to buy more on a pullback rather than with established short-term momentum, hey, the long-term trend is established, no doubt about that. But established short-term momentum, you might wait for some nice white candles, probably around 210 or even a close above 210. If you're more aggressive, you might go on just a couple more white candles in this zone before 210. But this peak here, and sorry, I shouldn't have said 210. I should have found that. I need to give you the exact number, 211.46. So not 210, but a close above 211.46, 211.50 and beyond. So that would be your conservative trigger to buy. More aggressive, waiting for some white candles even beneath that zone, in line with what is a very strong trend. If I had to give this one a score out of 10, I'd go 7 out of 10. I was about to say 7.5. Maybe I can sneak into 7.5. And what we're looking at here is a spreadsheet powered by Thomson Reuters Refinitiv Icon product. And what Refinitiv Icon does is it takes all the broker consensus, or at least how many brokers they can get consensus for. So for example, we've got 4 brokers with a strong buy, 5 with a buy, 4 with a hold, no sells, no strong sells. So that's really encouraging. They say beauty's in the eye of the beholder, and nobody is beholding this too negatively at this stage. The average rating therefore is a buy. The average price target from those brokers is 218.67, which if we head down here, it tells us it allows for about 7.6% upside in the Macquarie Bank share price. And you're going to get a dividend yield of around about 3.2% over the next couple of years. I would suggest you fully franked. So, in terms of total shareholder return, potentially around about 10% upside there. So that all looks pretty good to kick off. Then I just need to change a couple of bits and pieces around here, and this will then translate now to some of my estimates of the way that I like to value stocks. So you can see the way the brokers do it, and that might be enough for you. And then down here, you might want to ignore this. This is just the way I want to do it, or you might put more weight on this. Just off the bat, without changing any of my features down here, it's saying Macquarie Bank, look, it's probably fairly valued. So that's encouraging to start off with, but I just need to check some other things here. So the earnings growth rate, brokers are at about 4%, which I think is low for Macquarie Bank. There's a very low risk of them achieving this very low hurdle rate. So that straight away puts upside there. And then let's have a look at the PE, benchmark PE. So, historically, Macquarie definitely trading sort of in the mid-20s. I think even then, 17.7 would actually be really cheap. So I think this is a really strict number for Macquarie. We're holding it to a really high account. In fact, if I'm so bold as to say, well, to be honest, personally, I'd actually be happy to pay 20 times earnings for Macquarie Bank, even if I don't change those estimates, because they are the broker's estimates and I respect those. This bit is more about, well, what am I prepared to pay for Macquarie Bank? I'd be prepared to pay 20 times earnings, no worries at all for Macquarie, and that actually, coincidentally, this pure coincidence, gives me a personal valuation pretty much in line with what the brokers are saying. So Macquarie checking out on the technicals. What do we say? 7.5 out of 10, and looking pretty solid there as well on the fundamentals. Next one for John is AIS. Ouch. Doesn't look so good here, John. I'm trying to find any redeeming features. I can't. I'm going to make this one real quick. Short-term trend is down. Long-term trend is down. Overwhelming number of black candles compared to white candles. Price action, lower peaks and lower troughs, taking out any support. Look, if there is the slightest of slightest redeeming feature, 10 is a bit of a round number. You tend to get a little bit of a bounce there, and it has provided a base of support in the past. Not enough for me to get to a hold. Personally, I would call this a sell, but that might give you enough reason to hang on to it. Otherwise, it's certainly not a buy from me. I'm not even going to rate it in terms of a score out of 10. Okay, next one is for Gary, and Gary has HIO and GRR. And wonderful question, no doubt on the tips of everybody's lips. Would I buy HIO? And the next one he's going to talk about is Grange right now. The answer for HIO is no, I wouldn't buy it right now because it is too far away now from my value zone. I like to get them like here. So here, I know it's hindsight, but to be fair, I've no doubt we were here on Tuesday and I said I called it a buy on Tuesday, and no doubt it was my feature chart on Twitter on that day. Okay, so you can accuse me of being Mr. Hindsight all you like, but when it occurred, I've no doubt I was calling this my favourite chart on the market, no doubt. But just to summarise, that's where I prefer to get them, Gary, when they've got a nice trend. It's a beautiful light green, dark green, wonderful candles. So if you look at it up to this point, far more white candles than black candles. Price action is exemplary. And then the very shallow pullback close to that zone with the white candles again, and we're off. And that is fantastic. So down here, and again, you call me Mr. Hindsight if you like, but I was there, I was out there calling it that at the time, 10 out of 10. Up here, it's just question marks to me. It's too far away from the value zone now. So I'd need to see another pullback value zone catch up. I don't know when that's going to be. When we get into these exponential moves, and they're wonderful when you got them, I mean, to be fair, I started tipping this one. Go check the recordings, the tapes, Osby's tapes and Twitter files somewhere down. In fact, it was maybe even earlier than that. I think it was even sort of around here somewhere. When you've had such a good run, I think this one now falls into the category of managing our exits. And then it's just a question of whether we see significant supply signals in the market to do so. And I've been pretty consistent on this one, is that we haven't seen it. So you didn't see it here, you didn't see it here, you didn't see it here, and you certainly haven't seen it yet here. Now, I tell you what, this is starting to be a little interesting. Let me do something off screen, which is click the update button from my data provider, and we'll get the latest update as of 1:20 PM Sydney time. It's going to, it got even better. See, I would have predicted that shadow was going to grow as people get nervous at this big round number here. This major, massive round number of $1. Natural for people to get nervous. People who have been following me got in at 12 cents, 20 cents, 30 cents, 40 cents, 50 cents, doing so well and getting out. They're not selling. What does that tell you? Wow, that is incredible. I would have said, no brainer, today's the day you take profit. The fact that they're not taking profit, the fact they're still piling in is extraordinary. Now, today's session's not finished. We've still got a few hours to go. So let's see how that one closes. If it closes up near those highs, you don't need to manage your exit today. There's nothing left for you today, but I don't know, whatever you do this evening, go to sleep. After that, wake up tomorrow and reassess tomorrow, and really towards the end of trading tomorrow to see if you've got any big black candles developing or any candles with long upper shadows, those shadows pointing up. Tell us that demand rushed in the morning, and then by the end of the day, they were all put on the back foot. They're all put into losing positions, and that can cause a spill of supply the next day. Certainly when technical analysts like me see a candle with a long upper shadow, we want to get out as well the next day. So amazing, looks amazing. I know I'm a little bit off topic in terms of whether I'd buy it. but Gary, understand a lot of people listening to me today will have this, no doubt. So I reckon hang in there. Now, I'm not going to say, I pause there. I don't think this is really going against my rules. Okay, I don't like to break my rules. I don't think this is going against my rules, but I think this round number, should be noted, okay? But wait till the end of the day. Often round numbers do cause things to pause. So you might say, and depending on how you're feeling about this one, you might even say minus 1/3 simply, and I haven't checked the record, I have not told anybody to sell this stock yet, simply on the basis of the round number. And that might be a reason. But again, only part profits be my suggestion, because there's still so much demand in the system and so little supply, I guess, as well. I love looking at that chart, makes me happy. Hopefully lots of people listening have got on board. This is another one which I've obviously championed as well over a similar time frame. It looks amazing. Would I buy it here? Well, I think it's closer to the value zone in terms of buying it here. I'm pretty sure. Was that Tuesday? Was that Tuesday last week? Because I think we looked at it here and we said we'd be happy to buy it. So now, no, I think now you pause. So, I mean, pointing into the stick, do I buy it today? No, not on that candle, not on the basis of that candle, not on the basis of it indicating a bit of supply coming in here at a lower point than where that supply came in there. So not a panic at this stage, not at all. But the question that Gary's asked me is, would I buy it now? And the answer is no, I wouldn't buy it now. Would I hold on to it? Absolutely, I'd hold on to it. If I had to give this a score out of 10, or it'd be high, it'd be 8.5 out of 10, and only losing a little bit because of today's developing candle. But today's candle isn't finished. As we saw on HIO, the next update might show that as a big white candle, and then that rating is going to go higher and higher. Thanks for those two, Gary. Next one I've got is from Nick, and he's asking about IVZ, which is Invictus Energy, which does look fantastic. And you see all the things I like to see there with the wonderful green zone, the white candles, a few black candles there. So hopefully these white candles are starting a pattern. I don't think there's anything to panic on this one at this point in time. It's having a little bit of a breather. That's okay. It's had a nice run. We might even see, as this zone sort of tracks higher, we might even see a little bit of a pullback to there. But yeah, this is a wonderful chart. So this would be, again, 8.5, 9 out of 10 even. I think it looks so good. I like the volume as well here, because what we're seeing here is that we've removed a lot of supply from the system, and with less supply in the system, that facilitates a price increase. All looks good there. My personal opinion is absolutely hang on to that. As a buyer, I'd actually be comfortable even buying it today. I don't think there's any reason why you wouldn't buy it, except for maybe waiting for a little bit of a pullback. That might be the style of trader that you are. You prefer to buy a little bit of a pullback closer to the green zone with some white candles, and we know what sort of candles we like to see in and around that zone. We've kind of talked about them already as that sort of white candle, or the one with the lower shadow, which is kind of that one there. Not always that one there. Look at this. So I'll draw two arrows next to this one just to emphasize it. That is a wonderful candle. That is the candle you want to see in the light green zone on a pullback in a wonderful clear double green trend. Okay, and that's kind of that Hawsons Iron candle that we saw previously, didn't we, where I said it was about 10 out of 10. Okay, next one coming from Tesh. Tesh is asking about Calix, so that's CXL. Looks wonderful. Do you think it might drop to 720 for a buy, even perhaps 550? Okay, well, let's mark in 720. Let's see what the relevance is of 720. Well, there's a bit of a support point there. And then the next question is 550. Now, I wouldn't be buying it at 550, because I reckon if it got to 550, the trend would look pretty terrible, and therefore it would be a pass from me. So I'm not the style of trader. Remember, I'm a trend follower, so that means I don't buy downtrends. I don't buy stocks that are in established downtrends. I prefer to find, double greens, which is where it is right now. I think today's candle is encouraging, but we need to see where it closes. So I'm a little bit concerned about this upper shadow here. But otherwise, it's a very tiny concern. Of course, we do have some supply here as well. So again, what we're concerned about, what I'm concerned about, is this idea of building supply. I don't want to see building supply. I want to see diminishing supply. I want to see building demand. not building supply. And I do think demand is very, very strong. I mean, look at some of these beautiful candles in here off port zones that were sort of established and being held. So we can see, this is obviously a little supply zone here, acting as a little demand zone here, which is wonderful. Nice candles off that zone. All good. And I think it's actually held up pretty well in a terrible market. So if this becomes, this candle here, this last candle, if this closes near the highs, then this gets uprated to a buy for me. And in fact, if it closes on the high for today, it's going to be sort of a 9.5 out of 10. That's how good I think that pattern is. Okay, right now, I just wait and see how it closes and then make that decision. If you've got it, well, it's 100 at 9.5. Of course, you would then infer from that you would hold it. Do I think it's going to get to 720? Just reiterating, at 720, it wouldn't be a buy, I think, as well. That too much damage would have been done to the trend. And at 550, no, I wouldn't be interested there. So the question is, could it get there? Could it get there? Anything can happen. Would it be a buy if it did get to either of those spots? No, I don't believe so. Next one here is from King. King has EQR, and which is EQ Resources on screen. It looks pretty interesting, King. Yeah, I mean, King's saying that he is looking to possibly enter as it is forming a nice base over the last 6 months. And it is a nice base over this last 6 months. Nothing goes up in a straight line. Obviously, it would have been nice to be participating here. And if you weren't, that's not the end of the world. We can always wait for some sort of pullback to remove the supply that comes, because obviously down here, people at 2.5 cents, they're overjoyed at 7.5 cents. They've made 3 times their money, haven't they? And no surprise, look at this, King. So, sort of 2.5 cents is the base, and then we stop. Where do we stop? We stop at 5, and then we stop at 7.5, and maybe the next stop is at 10, isn't it? I do think this is building up. I like this one. I'd love to see more volume, King. I think we need to see a bit more supply removal in here, because I do believe there's a bit of supply to remove. Otherwise, I like the fact the short-term trend is establishing itself. The long-term trend is holding, and it has held really well. The candles, I'm seeing some white candles come in there, and the price action is improving. I think it's definitely one to keep an eye on. Am I going to rush out and buy it today? I don't think I'm far off, to be honest. The only thing that would keep me back, and again, it's about comparing stocks. It's about saying, well, this one looks great, but it has an easier run to gains than this one, which also looks great. So this one looks great, but ask yourself, where is the supply going to come in? So probably some supply coming in there, right? We talked about these pools of supply in previous editions of Ask the Expert. So, there's going to be a pool of supply there. There's going to be probably a smaller pool of supply there, but we need to trade with them. They're going to impede our progress to the upside. So we can find something that looks good. I said this looks good, looks very interesting, but has sort of fewer impediments to the upside, then you would go for that thing over this thing. So maybe this one, in that respect, needs a little bit more cooking, but I think it is very, very solid. Next one is from Jimmy, and his question is, can I please explain the use of Bollinger Bands in charts? Okay, so these are not Bollinger Bands, Jimmy. These are my moving averages, and I know when you type in your questions, they happen at the start, and then it might be 20 or 30 minutes by the time I get to your question. So I expect you heard my explanation before, and you're on top of what they are. They're not Bollinger Bands, they are just moving averages. I shouldn't say just moving averages. They're just enough for me. I don't use Bollinger Bands. I don't use many indicators. In fact, you can see on my screen, I don't use any indicators. I use very simple price action and trend-based tools. Hey, I've been looking at charts since the early 1990s, okay? And not just a few charts, every day of my life. Yeah, you can hear the fatigue there. No, I do love it. And I couldn't even imagine, honestly, I could not imagine doing anything else. But I've learned over those years, and I started out with 1,000 indicators on my screen, and all that did is just take away, just clouded, obscured the price action. The price action is the most important thing, and there are 1,000 courses out there right now telling you about other things than price action and saying that they're important. I tell you what, price action is the most important. It is simply explaining to you the balance of demand and supply in the market, and that is the ultimate determinant of price. So focus on the price action if you want to learn how to do good technical analysis. Of course, volume is important as well when we put it together, price action. And this last one down here, you might not have seen, it says ATR1, very simple, just that's volatility. Just looking at the daily volatility, and I'm looking for various factors there as well. Hopefully that answers your question, Jimmy. And next one is for Terry. And yeah, lots of stuff on technical analysis out there at the moment. Obviously, explosion of quote unquote experts on the internet now who read a technical analysis book once, or did a course somewhere and feel that they can make some money teaching others. Obviously, Think Markets pays me, but apart from that, this is you can come and go as you please, and I don't charge you anything for it. Thoughts on Lynas LYC, Lynas RareEarths. Ooh, yeah, looks. That's probably not the reaction you wanted, I think, Terry. I think you wanted a more enthusiastic reaction to that, and I think that reaction does sum up the chart pretty well, doesn't it? That's a key level, isn't it? And that's where the demand has come in the past, and pretty strong, actually. I think, it's a pretty solid level here, around that sort of 859 level. We want to see the demand still in place. We want to see that the market is valuing that level, because I think below it, the market's going to get really nervous. So this one's a little bit line ball. You can see the short-term trend has now swung to the downside. Long-term trend, good news, still intact. Okay, so no complaints there. And we are trying to work our way back away from it, so that's good. I think there's enough in it to hold it. And I know this is hindsight, and I can't remember if we discussed this one on the day. Honestly, I don't. But that's just for your reference going forward. When you see a black candle which is that large, which more importantly engulfs the two, probably not quite 100% there, but let's face it, for all intents and purposes, engulfs the two previous demand side candles, and when that occurs at an all-time high, it is typically not a great sign. Okay, so in and of itself, that candle is sufficient by itself for me to say, just personally, I would look at that and I would go next day, bang, no questions asked, minus 1/3 of my holdings, just for safety. Okay, and then I'm going to see how the market responds, because I tell you what, if I start to see these wonderful white candles all come back in again, I can always add my 1/3, and I've still got 2/3 of my position. Hunky-dory, happy days. But if it starts to go down and I'm forced into making tougher decisions about this, at least I feel reasonably good about myself and the fact that I got 1/3 out at higher levels. What we didn't see, now, big black supply candles, they're not great, let me say that, but in and of themselves, they are valuable. They kind of give us a quick clue as to where the market is at. So if we see this big supply event and we then see a bunch of white candles come in, as I said, happy days. But if we see further black candles come in, it tells me that this buy the dip mentality, which was in place for such a long time, is now at risk. And you can see the shadows, see these obviously black candles, but even the shadows that are trying to get back up and reclaim areas which should be demand, but then start acting as supply. This sort of a signal here, so that candle there, and this is just for you next time to say, okay, I'm trying to tune my eye into the signs that supply is building in the market, and therefore I need to do something with my position. So even that would be something like 1/3. I'm encouraged by, say, this candle here, the break of that, or I was going to say minus 1/3, but then why sell here when you might as well just hang on and see if this holds? So, yes, they're bad candles, and yes, we've broke the point of demand, but then you've got to use some common sense, right? You've got to say, well, I can get out here at 888, or I can just give it a little bit more time on my final third and see if we get a close beneath that level there. And that level there is 861. So, you're risking effectively another 27 cents on the final third of your position to find out if this thing's going to hold. But that's the way I'd be playing this right now. A close below 861. And for me, I feel it's all out on Lynas. And that's going to just mystify a bunch of people out there, because they're going to tell me Lynas, it's got rare earths and the demand for rare earths is going to skyrocket. And Lynas is such a wonderful company. It's got great cash flows and all those things. And I say, well, maybe, but with all of those things known by everybody in the market, I'm talking the entire world who does analysis, even despite all of those wonderful things that you've just told me about, there's still more supply than demand. And surely then that has to concern you. And that's the way I think you've got to look at all of your holdings at any time. Let me have a quick look at Lynas on the fundamentals and see what we're doing there. Takes a couple of seconds, obviously, to load up all the data, and we need to change this back to June because that's the correct financial year. And we do get some, we can't use a target of 20. We need to use a proper benchmark PE. So, 20, If we're holding it to account at a 20 PE, obviously it's going to look very, very cheap right now because the market is kind of only saying that it's prepared to pay around a 13. So probably a 13 is a more appropriate PE. It does bring that down, still looking pretty good there. Let's look at the EPS growth rate, and the market's expecting 22% over the next few years, with 200% this year. I'm going to say, given commodities markets are volatile, I think you'd be cavalier to leave that at a low risk setting, and you might prefer moderate or even high, given that 22% growth year on year is forecast. Even so, it doesn't look expensive here, does it? 1078. I'll show you, just for your reference, what it would look like with high, and it's going to bring it closer to fair value. And all that's doing is changing the discount rate that we apply to the company, okay? And you can split the difference. You could say, oh, well, hey Carl, I'm moderate, or I'm moderate low. I've given you all the variables. Go to the recording. It'll be out later on this evening or tomorrow, and then you can do some maths as to what you think the appropriate target is there. But somewhere between high and moderate might be your go, in which case maybe there's 10% upside, which is not completely out of whack with what the brokers are saying. They're at 1056 with an average target of a hold. Interesting that there's such a huge target on this, and yet we can only get to a hold. So we say take broker estimates with a broker ratings, I should say, with a bit of a pinch of salt, because sometimes they kind of talk their own books a little bit. But you have to be careful what I say. Okay, so that was Lynas. Now let's have a quick look at the next one, which is Lark. I don't have to go too far in the alphabet for that one. This one is also for Terry. I think I mentioned on the call last week that I like the company, I like the business, but I can't buy it because of the pretty terrible chart. There were some signs that it was improving, but they were very early signs. And I think after the last couple of days, you would say that improvement is now completely wiped out. In fact, it's looking pretty terrible. If I had to give this a score out of 10, I'm going to go about 8.5 out of 10. But let me just clarify by saying for a short trade. Okay, that's how I feel about that one. I don't like the look of that. Anthony's asking about uranium and lithium, how they're looking, and neither of them looking that great right now. So a lot of that hype and that euphoria, that shiny new thing status is coming out of those markets, and that's why we need to watch for those signs of building supply to take our profits. He's asking about a few stocks here, and I'm just going to whiz through them on the charts very quickly. ArizonaLithium is the first one on screen. First thing that strikes me about that, again, what I'm trying to do here is, it's not telling you what to do. I'm trying to teach you what to do and tune your eye into supply and demand. Those black candles are concerning for me, even when it's going up. It's going down. Think about what that means. So the way you get that black candle is you tend to open sort of high in the day and then close towards the low, and that just means that there is a lot of sell the rally. So it is going up because net each day it kind of closes a bit higher than the last day, but where it closes on the day's range is tending to be towards the low. So that smacks of distribution, smacks of people in the know, sort of the insiders looking at price appreciation as an opportunity to get out rather than an opportunity to rejoice and hang on for more. So that's the first thing. You see clearly all those black candles, it really stands out. We are seeing lower peaks on the chart. So you can see the lower peaks forming here. That's not great, but it does, again, bearish signs on the chart aren't terrible because they give us points of action, don't they? I think that was the word I was trying to find, or the phrase I was trying to find earlier. This idea of a point of action, this idea of sort of pushing us towards making a decision. And certainly I think below that trough there, and it's probably about 15.5, I can't see a great deal of reason to hang into this. And I think you would have had signs sort of using some of my methodologies I teach here to take some off the table prior to that. So for me, I'd be holding just a part position on this. I wouldn't have all in. There's probably enough to hang in on some because the trends are still very much intact, but it wouldn't be high up on the list. I can see a lot of good things there, but I think that the bad things are probably pulling this down to maybe a 6 out of 10 at best on that one. Okay, LTR is the next one. Liontown Resources. Wow, so controversial. This one, of course, and one that's really captured investors' imaginations. I've been pretty bearish on it in these sessions since that, and certainly since there and there and there. And I think maybe even last week we talked about the anatomy of your exits through here. It's very similar, isn't it, to one we saw before. And I'm trying to remember what that was, which was on Lynas. It's very similar to Lynas. Now, they're mining different stuff, but in terms of market sentiment, they are effectively the same thing. is the market's ability to sustain enough demand in the system to combat the supply, which is coming up because the thing has gone up so much. You need fresh blood coming in, chasing that shiny new thing to keep that going. And quite often, and I keep referring to this one, I know, Novonix, where you see that building supply, you see those changes of trends, and they can go down for a long period of time, even though they captured the market's imagination, and Liontown may be into that category. So I think, look, ditto everything I said for Lynas in terms of how you'd be trading this one, and your final exit point there, if you haven't already gotten out of this one, would be, let me give it to you. So I think that low there is the key one, and that low there is coming in at, I'll tell you, it's off screen, 128.5. So for 128 or 127 and lower, I think you've got to be out of this one because it could be a bit of a slippery slope from there. Now, that's all very bearish, it's all very depressing if you're an enthusiast of lithium stocks. Let me tell you what could turn it around, because, hey, my analysis changes day by day by day, by candle by candle by candle. That's not me flip-flopping, that's me just reading the price action and reading how demand and supply changes over time. So I'll tell you what would get this one out of the doldrums. Big white candle, okay? That's always a good start. So big white candles indicate excess demand in the system, and it is only excess demand which can make your company go up. And you can tell me all day about the wonderful things Liontown is doing with their upcoming mine, impending production, and their wonderful offtake agreements with the likes of Tesla. But I would put to you that if nobody cares about those things, or if nobody is stimulated to buy those things in the face of, let's face it, supply in the market, which you can see is clearly there, then this thing can't go up. So we need to see a candle like that, and or we need to see candles that may have also lower shadows, and that would look like something like that, coming in and around this long-term trend zone, which it's still a great chance. I mean, look, it's still a great chance of offering dynamic support. So here's, this is it. I mean, this is what's, again, wonderful about sometimes when supply occurs, is the ability then to set clear boundaries of getting out or getting in. A close back above 150 with some nice candles pulling out of that zone. And I'm going to go from, a very bearish person on Liontown to a very bullish person on Liontown. Not because I'm flip-flopping, but simply because I'm reading the price action. Next one is Paladin. All the good ones coming up in this question here from Anthony. It's very sideways from me. I'm going to go 50-50 on this one. So I go 5 out of 10. And every time it kind of goes back up towards the highs here, I must admit I am a sucker for this one because I do like the company. And I fall for it, and I tweet about it, and maybe you've even seen it on a tweet from me, and you probably think my name's mud right now because I've given you Paladin. But I do admit that I get too excited about this one, and I go 10 out of 10. And then I also admit that I get very disappointed by it very quickly thereafter. It goes back to a 5 out of 10 for me. So maybe stop listening to anything I have to say about Paladin is probably the best thing to do. I think I've given you enough clues in today's presentation to do the rest of the analysis on Paladin. BMN, another uranium stock. Again, another one, because I'm a bit of a uranium sucker. I am working on a big uranium article, which I will publish to the Think Markets website, to Twitter, probably before the end of the week. So keep an eye out for that. Again, I do tend to fall for this one and go 10 out of 10, but unfortunately, this is probably only 4 out of 10 here. Uranium prices have pulled back. And the final one for Anthony is MMI, another one which was starting to look good there, turned the corner, but I think you're just going to have to wait longer for this one. I'm not quite even a hold on that one as well. That would be a 3 or I'm going to probably go 4 out of 10, but it's not getting me excited enough, certainly, to put my money on the line in that one. Wish I had better news for you on some of those, Anthony. Sorry. Next one is CRR, which is CriticalResources. I think it's okay. I think it's a hold, but this one, it's depressing and disappointing. Even today's candle is disappointing. So I can get to a hold on that, but so many of these charts have come undone, and this just sort of solidifies this idea of when the trends are good, obviously you make hay while the sun is shining, and then as trends start to deteriorate, get the hell out of the market and sit on your hands because you tend to get burnt. Sorry, Chris. It looks good, but not great enough for me to call it a buy. I can go hold. A quick look at FYI. This one is for Rob. FYI Resources, which thanks for this one, Rob, because I can do it very quickly. It's a no for me on the basis that, remember what I said about my scan? I wouldn't even take a second look at this one. This is kind of that Novonix thing, isn't it? And this is how trends change and then things never come back again. And don't be that person that holds on all the way just being miserable every day watching this thing go down and down. Don't be that person. You can exercise that right. You're right as a shareholder to get out, read the signs in terms of the technicals, and you just find something better to do with your money. So it's a pass for me, Rob, on that one. HMX and AUN for Anthony. HMX looks okay. You can see some of the problems there, though, Anthony. I know it's one which has done pretty well, I think, since I started tweeting about it. But balance of probability now, I would suggest swings to partial exit here. So selling some, taking a bit of profit, keeping some skin in the game, because the long-term trend is still okay. And this here is actually pretty encouraging, and today's candle's not too bad either. So a nice white candle sort of pushing back up through 11 would get me more excited about this one. But until then, I think you're gonna hedge your bets on that one. And there's nothing wrong with hedging your bets, everyone. There's nothing wrong with hedging your bets. Brokerage, and here's a plug for the markets. Brokerage is so cheap right now. Back when I started trading, I was paying 3% back in the 90s for brokerage. It was all full service. ComSec didn't exist. I literally had one of the first ComSec accounts ever allocated because I was paying full service brokerage rates at the time in the order of magnitude of $80, $90, $100 for a transaction that was only a few $1,000s, by the way. So you can afford to hedge your bets with brokerage as cheap as it is today, and have a bid in, have a bid out, and trying to find the best for your money at any time. AUN, I can do this one very quickly, Anthony, because it doesn't look very good. Look, there's something going on there. It's one that I would, I was going to say I would keep an eye on it. That's a lie. I wouldn't keep an eye on this until it did a bit more. Okay, so until it's sort of trading up here somewhere, and then it would very much get an eye from me. For Raju, next one is NST. Disappointing. I tell you what, this was probably the last gold stock that I covered as a buy in that last little batch, and it's disappointing to see that it is. And when they do that, it's often a long road ahead, Raju. Today's candle's encouraging. You might want to see how the demand develops from here. So if you can get a couple of white candles coming in, as long as the candles stay white, stick with it. If they start to go black again, I think you've got to be out and just take your licks on NorthernStar, and probably promise never to trade NorthernStar again. Maybe that's the solution to the problem. Sorry about that. Raju's question is medium to long-term perspective. Short-term perspective doesn't look great. Medium to term perspective, the trend is indeterminate. If you look at the short-term trend, long-term trend, and long-term perspective, there was some good things happening, which really I think have been diminished now. How is MGX looking? And this one is coming from Anthony. Now, Anthony, I know I've disappointed you a few times, but hey, I'm liking this one, Anthony, because of the white candles that are coming in there in a tough market. So I like to see white candles. White candles are your friend. So this is all good. This is an absolute solid hold for me. And I would say that assuming that the rest of the market gets better, hopefully it does, you might find this thing actually make its next push off this level. And I would definitely hang on for that. And this is one I would keep very high on my watch list to buy as well. Okay, so this one is good to hold, I believe, in my opinion, and one to keep an eye on to buy. Next one's from Chris. He's got SMR, which, wonderful, wonderful, wonderful. Maybe a little bit of supply coming in today, Chris, but I don't think you need to manage your exits there yet. I would stick with that one. 250, minor round number. Maybe keep an eye out. But hey, if you have to, exercise some discretion there between Tuesdays, and take some profits, probably not a terrible idea. But wait for the candle. Don't just assume. Wait for the candle. Let the market tell you that supply is building. But what a wonderful one, and one we've tweeted about quite a bit. Are my candles Heikinashi from Chantel? No, they're just standard, run-of-the-mill, plain, boring Japanese candlesticks. Andrew wants LEL, I think. That's the one. Oh, amazing. Fantastic. That's the sound I think you wanted me to make on Lynas. This just looks wonderful. Stick with it. It looks amazing. You need to see where this closes, though. We don't want to see that shadow grow any longer. 150, maybe it's a bit of an issue. Probably not. But that is the best chart I've seen all day, Andrew. And thank you for giving that to me now, because that has made me very, very happy. Wonderful. Hopefully that does great things for you. Net is another one I've been tweeting about quite a bit for Sia. She's asking if she should add to her position. You know what, Sia, I can't see any reason why you wouldn't add to your position. I think those candles are amazing. They just scream to me of excess demand. The trends are great. See that long-term trend picking up. Look at the volume. We're removing a bunch of supply here. As that supply diminishes, it should get easier to go up. So I think I love your thinking. I think you're thinking absolutely like a successful investor, is that when you're on a good thing, add to it. Okay, assuming there's no big supply events around the place, of course. I love it. certainly hold it, and I would actually run out and buy that now. Hey, wait till the end of the candle. Wait till the end of the candle. No, I say right now. I get excited. We need to see what the candle looks like at the end. Okay, we are at the end of the list. Hey, if you want to come back next week for some more stock analysis and hopefully a little bit of education as well, tune in at Tuesday at 1 p.m. Tell your friends about it. I think they'd get a lot of value out of this as well. And the more the merrier. I'm happy to help out anybody I can in this system. But there is a catch, and people have criticised me for the catch. Obviously I'm employed by Think Markets. I enjoy what I do, and I enjoy sharing as much of my knowledge as I can for people who are willing or could be bothered to accept it. However, somebody's got to pay the bills, and that's Think Markets. But hey, they are the good guys in the Australian stockbroking industry. $8 flat trades, CHESS sponsored, so you know that those holdings are yours and yours alone. Bunch of products to trade. But the key thing here is the customer support you're going to get. You can ring up and talk to an actual person that I guarantee you will solve your problem on the spot. And of course, you get my analysis. That's pretty neat as well. We've also got at the moment a 10 free trade offer going if you open a new account with us for new clients. But hey, if you say you saw me and asked the experts, you get a bonus 10 trades as well. And if you're an existing client, no doubt you've got 4 people you can find who are still trading with their banks, paying $20 probably for a trade. Come over to us, they can save a bunch of money and you'll get a bunch of free trades as well. Terms and conditions apply, as they tend to do. Head to the website for details. If you watch me on YouTube, make sure you hit the subscribe button and the bell icon to get notified of any new videos I create. And please smash that like button to let me know you like what I'm doing, so I'll do some more of it. Apart from that, it has been an absolute pleasure chatting with you today. All the best for your investing until we catch up again. Bye-bye for now.